If you like what you see, if I can please request you to subscribe to my channel. So what is book value and how does it compare with the intrinsic value? Book value and intrinsic value are distinct ways of measuring the value of a company. When you think of book value, the first thing that should come to mind is the present. On the other hand, when you think of intrinsic value, what should come to mind is the future. Book value, in its simplest sense, is simply the total assets minus total liabilities. You can think of it as the amount that shareholders would receive in the event of liquidation of a company. Intrinsic value, on the other hand, is obtained by taking the present value of earnings that a company is going to generate in the future. A big distinction between accounting and finance is that accountants tend to look backwards, while finance professionals look forward. But why is the book value important? Well, book value is a basic measure of a company's valuation. It is based on historic data and is not subjective. If we look at startups, they don't have a market price. While you could use other valuation methods, book value would provide details on the startup's tangible assets like equipment. Book value is useful for comparing companies having a lot of machinery like railroads, or companies with financial instruments like banks. On the other hand, it's probably not as relevant for firms in the services industry with few tangible assets. Well, in that case, what is market value then, and how does it compare to intrinsic value? Market value is simply the value of the company according to the stock market. It is a public opinion and sentiment, as opposed to intrinsic value, which is a private opinion. So after all this, how do we know if a share is undervalued? Let's say an analyst, after performing a discounted cash flow, comes up with the present valuation and realizes that it's higher than the valuation ascribed by the stock market. In this scenario, we can say that the share is undervalued. It represents a great buying opportunity. Another concept that we discussed in earlier videos, inflation, has a complex relationship with valuation. So my question for the day is, what is the difference between headline inflation and core inflation?